Hey traders. So we left off, let's see here. Now this morning when we opened up, there was something sort of unique about the open. Check this out. We were in a range, and you can see right here we had positive tension, a decent amount, about plus 40%, pushing up on the market. So in a ranging mindset, you look for breakouts down, positive tension to drag it back up. So you can see it a little bit better here. We had a breakout to a new low and moved up, and look at, we had right here plus 70 momentum. So a lot of traders were looking at this, feeling the range, seeing the positive numbers, and tried to buy into it, probably in these areas. So what the market did is we could see decay stayed down. Now going into the close, look at what we had. We had one right here where momentum tested the zero and price got bought up. Two, you could count this, but I'm just going to scoot over and say this was two, where the market came down, tested decay, got sort of under there, and the market bought it up. And we're going on number three, where the market is finally testing again, and that's three chances for them to come in and buy this up. So what I'm thinking is happening is that we have some positive tension that we'll want to do something like that, release, and then the next event that matters will be testing the zero. So we have traders in the market. The most reasonable thing is a post-close pop. And that would be a situation where these traders were unable to get out. And so, around the close, a lot of traders just dump their trades, especially when they're this underwater. Secondly, we had a little one-tick trap here. We had another one-tick trap here. We had a higher low, so this is a stop out. If you were long, you saw the one tick, you got stopped out. That causes FOMO on this up here. So what would happen is you try and buy in here, you get stopped. It'd be very frustrating. The market would rally up. You try and buy in, it moved down, gave you a little hope, stopped you out. So finally, double one tick trap, you might try and buy it and you get stopped again. This is a very, 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 very frustrating type of market for a lot of people to trade. If you didn't recognize the range that we were in, you may have tried to read a little more into this than you should have. So after the close, I'm thinking it's reasonable for everybody to dump their position at like the worst possible price, and then to see prices rise after the close is kind of what I'm leaning towards. The thing that I want to see, and the reason I think is important, is if we're going to close here, and that's going to start looking bearish. But we didn't really have a good spot where price went up and tested the zero, so tomorrow tension could easily release up, try and test the zero, and then, well, absolutely, that would look bearish if we were able to defend that. So we have two bearish things that are showing up right here. But tomorrow we have this kind of temporary bullish event that could happen, is tension sweeping up. And I think that's what's a lot of people are keying on. All these morning people are keying into the fact that there is some upward push, but it's not going to let them take profits on that in the way that they did. So I'm expecting the market to kind of close, pop, they get out and pop up. And tomorrow, if we could get a good gap up, let's say price is closed here, we get a gap up to here, and we see prices move while tension tests zero and then pulls back down. It'd be the best situation for this to set up a really great bearish trending mindset again, and we could see some further pushes down. If tension gets up to and through zero, then we'll be looking at continued ranges. And today was just a very frustrating day for most people. So that's what I'm seeing is happening right now. You can check it out, take a look after the close, see how well it works. I hope this is helpful in understanding a little bit of what I'm looking at over here. As always, good luck trading.